Can my small business use the de minimis safe harbor election? Imagine saving time and money on your taxes just by making a simple choice. That's what the de minimis safe harbor election can do for your small business. If you're wondering whether you can use it, let's break down what it involves and how it might help you. First, this election lets your business immediately deduct the cost of certain tangible property items instead of spreading out the deduction over several years. It's a way to make your tax filing simpler and possibly lower your taxable income for the year you buy the items. But not every business qualifies, so let's see what the rules are. Your business must have average annual gross receipts of $10 million or less for the past 3 years. If you own or lease building property, the unadjusted basis of that property must be $1 million or less. Also, the total amount spent on repairs, maintenance, or improvements on the building during the year cannot go over 2% of the unadjusted basis of the building or $10,000, whichever is less. Now about the thresholds for expensing items. If your business does not have an applicable financial statement, which means audited financial reports, you can expense items costing up to $2,500 per invoice or item. If you do have an applicable financial statement, like audited financial statements, the limit increases to $5,000 per invoice or item. To make this election, you need to attach a written statement to your federal tax return for that year. The statement should be titled Section 1.263, a -1F of de minimis safe harbor election. It must include your business name, address, taxpayer identification number, and a declaration that you are making the election under the IRS regulation. You only need to do this once each year, and there is no need to file a separate Form like Form 3115. For small businesses, especially those owned by Asian Americans, this election can be a real time saver. It helps avoid the hassle of tracking small assets and makes record keeping easier. You can immediately deduct lower-cost items such as equipment, supplies, or minor improvements to your property. This can help with cash flow and reduce your taxable income, giving your business more flexibility. Just remember, to qualify, your business must meet the gross receipts and property basis limits, and you must follow the proper procedure to make the election. If you do, you can expense qualifying items up to $2,500 or $5,000 per item or invoice, depending on whether you have an applicable financial statement. This simple step can make your tax process smoother and more manageable.